Good morning, you're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day, but first let's kick off with our banner story. The bicameral conference committee has passed the CREATE bill, and both chambers of Congress are expected to ratify that measure today. The BICAM approved bill grants 4 to 7 years of income tax holiday and 10 years of specific corporate income tax to exporters and domestic enterprises that are deemed critical by the NEDA. The measure also immediately lowers corporate income tax, or CIT, to 25%. That's from the current rate of 30%. The bicameral panel also agreed to retain the Senate's proposal to lower the CIT further to 20% for MSMEs with a net taxable income below 5 million pesos and assets below 100 million pesos. House Ways and Means Committee Chairman Albay Representative Joey Salceda said the CREATE bill is expected to attract up to 12 trillion pesos worth of local and foreign investments over the next 10 years. He said this will result in around 1.8 million jobs in the next decade. Okay, guys, kicking off the markets report with a check on Wall Street. Overnight, U.S. shares had their biggest rally in about 10 weeks. That's as concerns ease on that speculative buying as having an impact on the equity bull markets over there. So the benchmark, you can see on my terminal here, rebounding from last week's sell-off. That advance was actually broad-based, but led by tech and retail companies. Particularly, you've got Amazon and Google set to report their earnings today. Just a quick check on Europe as well. Also rebounding and enjoying some gains, at least on Monday morning. I did want to take a quick peek on silver. We haven't really seen that commodity in a while, but that was really the focus of trading over in the weekend and as well as on Monday's trade. You can see that paring back those stellar gains that happened as they actually reached an almost 8-year high. I'm just going to pull out the 3-day chart so you can see the major impact on that. It's actually up by 8.6% in just the 3 past days of trading. So that whole short squeezing frenzy, which we had been seeing throughout the past couple of weeks in terms of GameStop and these retail traders trying to squeeze out those hedge funds, seems to now be quieting down. You've actually got GameStop turning bearish yesterday, and as I mentioned, silver retreating. And this also comes as JP Morgan Chase joined Barclays in saying that this battle between retail versus hedge funds is actually quite small and is also unlikely to cause a significant setback for the market. So let's take a quick peek as well at the virus update here. I'm going to just be pulling out the terminal for you. It's going to take some time for me to be able to show you those figures, but nevertheless, investors, after this whole frenzy, as I mentioned on that GameStop story, are now back to focusing on whether this virus can be contained. They're also starting to be looking at the vaccine story here. You can see that on my terminal, how the worldwide cases are actually up by 413,000 as of last print. So some updates on that. More Americans have now received at least 1 dose of a COVID-19 vaccine, then have tested positive for the virus. You've also got Chancellor Angela Merkel over in Germany now vowing to offer all Germans a vaccine that's by the end of September. She said no matter what happens, it's going to be happening. Globally, however, cases are topping 103 million. Deaths now surpassing 2.2 million. But on the upside, you've got more than 98.3 million shots already given worldwide. Let's take a quick peek at how our markets here over in the Philippines are opening. Recall that yesterday we finally felt some relief there. We were up by 3.05%. That was on the back, according to analysts watching the market, on the back of a PMI Jan print, which was expansionary and also better than the last print. You've also got the vaccine distribution plans being laid out as well on Monday. So you've got AstraZeneca and Pfizer set to be arriving here. They've both received FDA approval. You've got Finance Secretary Sonny Dominguez saying the Philippines is now negotiating for 178 million vaccine doses. So that's enough to inoculate 92 million people. We've also secured $1.4 billion of funding just from multilateral agencies. A quick peek on which ones are the movers this morning as we continue that uptrend and hopefully keep that way for the rest of the trading week. URC leading the charge here up by 2 4/10%. So quite some star players here, not necessarily all consumer related. You've got Robinson's Land as well, Ayala Corp. So quite a broad recovery here, but you've still got a couple sitting out that rally. You've got SM Prime in particular. That's a big chunk of the index, down by 1.5%. And I just wanted to focus on one specific stock this morning that's also been in the news since yesterday and actually has been the market darling for quite some time now. That's AC Energy. They have said in yesterday's briefing that they're eyeing a 30 billion peso share sale for expansion. So this is going to help them meet their target. They want to be Southeast Asia's largest listed renewable platform by 2025. Now recall, they've already raised 5.3 billion, that's just in January, from a stock rights offer, and they're planning to add to that sale. So planning to sell some shares to GIC, so that's of course a Singapore private equity firm, and then hold on a follow-on offering in the middle of the year before then selling additional shares to GIC by the year end. They've also mentioned they are on track to meeting, or not even meeting, exceeding rather, their target of 5,000 megawatts of renewables by 2025. They're actually expecting that already to be reaching half by the end of the year. AC Energy enjoying a bump up that's up by 2% to 6 pesos and 81 centavos. Okay, guys, now we shift our attention over to an industry with arguably the most diverging outlooks out there. So here to weigh in and share with us the latest developments, we have with us David Leechiu of Leechiu Property Consultants. Good morning, David, and welcome to the broadcast.
Morning. Thanks, Danie, for having me.
David, in your last briefer, you mentioned that you're seeing early signs of recovery in the property space. I have to press you on that, whether you can say with confidence that rock bottom has already hit, and what exactly do you mean by recovery? Is that in terms of vacancy rates? Because there seems to be a lag effect still on that, according to other people. Is that on the pricing? Have we already hit rock bottom instead of pricing? So kindly enlighten us on why you believe that recovery is already underway.
Yeah, so I think it's because we've been through the worst of the COVID crisis, in the sense that there was a lot less hope a few months ago, and then the vaccines came out. You had a lot less, you had a lot more opportunity for foreclosures, but those things were stemmed and delayed. And jobs continued to be created in the BPO sector. And then this whole development of the TRO against the POGO sector really slowed down the exodus of the POGO sector, and that's big. And from what I hear, the politicians, the administration, and the POGO sector are all trying to work something out, because the 9 months that the POGO sector was constrained, people appreciated the economic benefits of having them around versus not having them around. And it's not just the tax issues; it's also the travel bans and the ability for the foreign labor to enter the market or exit the market here in the Philippines. And as more vaccines are out and available in the world in the next few weeks to a few months, and the visa certifications or the vaccine visas are made more available, then more people will be able to access the labor markets from abroad to come here, and that will be the other component that will make the recovery of the POGO happen. And when they do, it's going to soak up a lot of the vacant space that's available coming online in the pipeline. And as you know, the delays, more and more construction projects are being delayed because of COVID protocols, and so that's going to defer the supply even further down the year. And then I think 60% of all the spaces vacated by POGOs in the last 12 months are PEZA spaces, at a time when PEZA space is so scarce that people are backfilling that space by BPO companies who are growing, have been growing in the last 7-8 months.
David, can I just press on that POGO issue? It's a TRO, right? So in any case, it can still occur once they do decide, or if they actually do decide to impose the tax. To what extent are POGO companies already willing to reestablish themselves, given that there's still this uncertainty on the table?
Well, the two components that need to happen will be a compromise agreement between the industry and the government, which includes not just the national government but the Senate and Congress. So all three political platforms have to agree together with the POGO sector, which I think the POGO sector is more or less pushing. I'm confident that they're going to come up with some level of agreement because, as we all know, our people, our representatives in government are very rational people, very practical people.
Okay, so wait and see mode in terms of that. Now let's talk about the other parts of the recovery here. You did mention in your recent briefing that you sold a property in BGC, if I'm not mistaken, for an amount that's much higher than the prices pre-COVID. Tell us, is this a one-off? Is this exceptional to that space in particular, or is this telling of the rest of the industry when it comes to a quick rebound in prices, especially as others have pointed out, businesses have yet to pivot, companies have yet to close, and we might be actually be feeling the pain towards this year still.
Yeah, so I think I think that's a very big boost for confidence that the property market is resilient. And what makes it resilient is that the private sector has very low levels of debt, and there's no pressure in the private sector higher end market to 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 be distressed sellers. Number two, there's a lot of money out there, and the money is just going to keep increasing because of the lower tax rates, the increased borrowings, election spending coming up around the corner. All those things are just going to mean that more money is going to look for a home somewhere. And Bonifacio remains to be the best property market in the Philippines. It remains to be the most expensive, most valued property market in the Philippines. And that's because that's the risk premium that they're willing to pay. You want to buy property in Bonifacio, it comes at a very high price. But that price, in return for that price, you get a lot of stability and a lot of certainty about your investments.
Okay, so people do have money to spend there. They're just sitting on cash for the time being. You mentioned infrastructure play, and especially in your report, how that is supposed to buoy the property space. But we have seen some delays, particularly in our two airport projects here. Are these again firm specific related issues, or does this also signal that we might not be able to meet our build targets, and as such there might not be this recovery as quickly as we were hoping?
Yeah, I think culturally, and you might find this culturally, we're very good in drawing things, but we're very poor in executing these things. And
Okay.
the credit we can give this administration is that they, because of sheer political will, power, and force, we were able to complete a lot of infrastructure projects that normally would have been delayed, grossly delayed because of politics and whatever issues. Most of those things went away. So that's the biggest credit we have to give this administration as far as infrastructure development is concerned. And there's a lot more in the pipeline. Whatever delays you see now is probably just one off because the general intent is to make these things happen at a shorter time. And what many people have to appreciate also is that 15 years ago, many of these projects were unviable because of the high interest rate environment. Today, interest rates continue to collapse despite the fact that they are at record lows. And the fact that they are at record lows will make many of these infra projects
Okay.
viable, profitable.
Just on that topic, and before we let you go, David, and I'll just put it all in one question: do we have the money? Does the government have the money, especially given that the budget is going to also be proportionate to the COVID recovery response? There's still a lot of fiscal spending that needs to happen to have this recovery. And on the other hand, what would be the impact of the 2022 elections on all of these projects, and particularly on the property recovery?
Yes, we do have the money. We've moved our debt ratio from 39% to 53% GDP, debt to GDP ratios. And even with that massive increase in such a short span of time, we still have one of the lowest debt numbers in the world, proportion to GDP. The second thing is with the additional borrowings coming up, with the lower interest rates, with the collapsing of interest rates, that's going to just make money more and more available to the public, more and more available to the middle class and below, and that's going to steer construction activity and real estate activity throughout the country, not just in Manila or NCR. The OFW money is going to keep flowing in, $30 billion a year, and most of that gets sucked in by the government and the big conglomerates for their businesses. The lowering tax rates, the ayudas, plus election spending, which will be pretty significant source of liquidity, plus the emergence of POGO sector will all, I think, make money swoosh around in the Philippine economy much more than before. And and you just have to look at the sentiment all around the world and how vaccine after vaccine is being made available to the general public. That's exciting, and that's dramatically improving sentiment all throughout.
Okay, so still some ammunition there, particularly for our government to continue with these projects and the interest rates hopefully buoying consumption as well. Thank you so much for those insights, David Leechiu of LPC.
Thanks, Danie.
Checking in on the other headlines we're keeping our eyes on, IHS Markit attributes the turnaround in the country's PMI to an uptick in domestic demand, which drove output and new orders higher. The Philippines manufacturing PMI clocked in at a 25-month high in January. Economist Shreya Patel says this data indicated a rebound in operating conditions across the sector after 3 successive months of decline. But the strong rebound in production was not enough to stop further job cuts coming into 2021. IHS Markit says restructuring efforts and voluntary resignations in factories continued last month. Still, local manufacturers remain optimistic that production will grow this year, with continued strong demand and the further easing of quarantine restrictions. Patel said businesses are also counting on the smooth rollout of vaccines to bring back confidence in the sector. Meanwhile, Trade Secretary Mon Lopez noted the challenges raised by manufacturing firms, but welcomed the January print as an indication that the sector is now starting to recover. NEDA is set to make its pitch to Congress on the urgency of passing economic reform bills before the legislature turns its attention to election preparations. That is according to Acting Socio-Economic Planning Secretary Carl Chua in a televised briefing. Chua explained the bills need to get enacted together to revive the economy. All economic reform bills, including the Public Service Act, Trade Liberalization Act, and the Foreign Investment Act, are pending at the Senate. They are supposedly complementing other reform programs such as the Build program and the strengthened anti-red tape law. Chua also announced that Metro Manila may be placed under modified GCQ status next month. That's on the back of the anticipated vaccine rollout in February and if the public continues to observe health protocols. The bill proposing to give a 25% tax discount to medical frontliners has passed the lower house on final reading. House lawmakers unanimously voted to approve House Bill 8259, that's to provide tax relief to healthcare workers who participated in containing the spread of COVID-19. However, the tax benefits is only limited to qualified health workers' salary and related compensation. This means that the bill does not cover business, investments, and income from other sources. Now that the proposal has hurdled the lower house scrutiny, it will have to pass through senators before it gets the final approval from President Duterte. And that's a first look into the business day. Today is Tuesday, February 2nd, 2021. Catch Business World live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel, and we are One News.